Hi, welcome to the Market Alert for Thursday, the 6th of October 2016. So, yesterday's activity for the 5th, see the market move higher initially before we had the crude oil figures, market managing to get to the scalp before the market then released the crude oil. Then we had a sell following this, which failed miserably, managed to put a few points in first, but the entry price is right on the 18,250 level, and this stopped the market reversed. Fortunately, we had a buy signal to cover the 26-point loss on this one, and the market then trading up and just breaking through the resistance there at which is going to be 18,300 before then the market got into its sideways move. I didn't send a note out because the market's waiting for the non-farm payroll figures, but as it's the 2 days before the figures, the market also wanting to move back to the highs as well. And then we had the final signal towards the the beginning of the evening session there, and moving higher. And the reason I mention this, if you look at the daily chart, we're stuck in this very tight sideways range as we're working our way towards the election. I think it's about 36 days now for the US elections. And you can see the market down yesterday and then up the day after. And again, I'm just going to put the crosshairs on here. I'll show you something. Just do this. Right, so again, you can see we've got down days. We have more volume than the up days each time. So the market wants to sell off, but it's not allowed to sell off. So again, just keep an eye on this. You can see how the volume drops off there as they drive the market back up. But on the down days, the volume is very high. This one is an exception, and no doubt there was a lot of short covering that created that move to the upside there. Well, I've no doubts about that. But then we resume with the down days again with the higher volumes than the up days. So an interesting pattern there that you just want to keep an eye on. And what else have we got news-wise? It's fairly quiet at the moment. Unemployment claims at 1:30, nothing for this afternoon, day before the non-farm payrolls. So they're going to do their best to keep the market sideways to higher, I would have thought, today, in anticipation of these figures. And of course, as the Fed is, in Yellen's word, data dependent, let's hope that the figures come out that show a massive increase in employment, and she's forced to actually increase interest rates. That'll really set the cat amongst the pigeons. Let's see how data dependent she is. And again, as we head towards December, there's the next live meeting for the Fed. I think she's going to be painted into a corner where she will have to. That's of course unless the figures are fudged and they make it so that she doesn't have to do that, because last time there was carnage in the markets, as you've seen before, 2,000-point drop when they increased by just 1/4%. So goodness knows what only will happen if they end up having to have moved it by 0.5% within the year. So much for increasing the rate 6 times this last year. It's simply not happened. On the implied volatility front, we've got, well, actually, let's deal with Deutsche Bank while we're here. It's gone out of the news. That's because they've managed to move the market now above the 12 euros per share level. Obviously something's going on here. It shouldn't be moving this high. It's all gone very, very quiet on Deutsche Bank, but as I said before, calm before the storm. The dead cat bounce. If you have a look at the 3 monthly chart, you will see many times where the market's gone up and then moved back to the downside. You probably need a bit longer than that, a year, but I showed it yesterday. You can see the every time the market moves higher, it's then slammed back to the downside as well. Nothing's gone away, nothing's changed. It's just gone off the boil at the moment because there's steadiness there. So obviously there's some backdoor either bailout or funding of the stock that's going on at the moment to keep this market around the 12 euros. On the implied volatility, 12.40, up slightly, even though the market was up yesterday. But getting into a bit of a sideways pattern itself there as well. Right, that's it for today. Short and sharp to the point. There's not a lot to report. Quiet day. So it's the day before the FOMC, so that's why the market's are likely to be quiet today, waiting for that so-called data-dependent data for the Fed to make its decision on interest rates. That's it from me. I'll report in if there's anything. Other than that, have a great day, and as ever, thanks for watching. See you in the next one.